Today we're taking a look at Harmony One, cryptocurrency analysis and prediction, in anticipation of the next 48 hours. Welcome back to Crypto Cash, your one-stop shop for cryptocurrency analysis. Before we look at this analysis though, do not forget to subscribe and get notified just as soon as these videos are released so that you have enough time to plan out your trades as we provide cryptocurrency analysis videos on a regular basis. If you want to benefit the most from our analysis, then we always recommend listening and taking notes. You'll be sure to watch the screen for graphs and charts that reflect the analysis. This guarantees you have only the correct information that you will need heading into the upcoming 24 to 48 hours. We will start off by analyzing the fundamentals and then focus on the technical data. We will also provide you with potential action plans for the future so you may be better prepared. This is not financial advice. This video is designed for educational purposes only. Now let's get started with the fundamentals. Harmony One is a blockchain-based platform built to solve the riddle of delivering both scalability and decentralization at no expense to one another. Harmony One is a protocol with the trustless Ethereum bridge that separates the chain into segments that processes transactions and stores data in parallel. It's considered a layer 2 solution, and it splits both the nodes and blockchain states into shards. This means the network can scale linearly. Market cap of $1 billion. The maximum supply is 12.6 billion, and the circulating supply is 9.3 billion. That's 75% of its total. Today's high is 0.167. Today's low is 0.1185. That's an increase of 41% in the past 4 hours alone. The 52-week high is 0.22, 52-week low is 1 cent, and the 52-week increase, get this, is 2,370%. Would have been nice to get in at that point. This week's range is 0.1185 to upwards of 0.22. The price has been in consolidation over the past 10 days after hitting its all-time high of 0.224, which was tested twice in a 5-day period. Ever since then, it slowly died off to hit its lowest point in 2 weeks of 0.1185. Since then, it's rallied back to 0.167 and appears to be back on track. Again, keep extra special close attention to what's going on right now. It hasn't fully recovered. Potential support is 0.1185, and the resistance line that's been tested 3 times over the past 48 hours is hovering around 0.167. This is a line I want you to pay extra special attention to because it's currently a resistance, but if it breaks above and is tested more than twice, then it will become a new support. And now for the technical analysis. Taking a closer look at the 15-minute chart, you can see the moving averages are working as support lines now, but they were previously very strong resistance lines. Also note the strong increase above the 100-day moving average after it was tested 3 times. This is interesting because it does tell us the market sentiment has changed from bearish to bullish. Now this isn't 100%. There is still a chance it could reverse. That said, approach with extreme caution and wait for the VWAP, the volume weighted average price, to be tested. It's the best indicator in situations like these because of the fact that the price has spiked up so dramatically over the last 4 hours alone. Okay, so anytime there's a strong, sharp increase, you always want to be cautious and use something other than the moving averages. VWAP is the best indicator for that. If the VWAP is tested more than 2 times in the 30-minute period and remains above, this will be a positive technical sign to go long. If the price increases over the resistance line of 0.167 and remains above, and again is tested likely more than twice, this will be also a very positive technical sign to buy, especially for a long position, of course. For those considering a short position, do the inverse of what I just recommended. Pay close attention to the support level the VWAP is creating and see if it gets tested. If the variance is large enough for it to break and stay below, the previous support is now a resistance. Once this is identified, look at the RSI and see if it's considered overbought. Typically anything under 45 is a good entry point. Also recommend you remember to see the MACD and to identify this as well to see if it's trending downward and losing momentum. If so, it would be a perfect storm for a short position. Just remember to average down and sell small portions of your position to ensure you take profits whenever possible. For my swing traders out there, as you can see, there's been a decent sell-off over the past 10 days after hitting the resistance line of 0.22 for the second time. It did this twice. Now, in situations like these, we want you to wait until the support level is tested before taking entry. Pay close attention to what happens when the 0.16 resistance level is tested. If it bounces off this level and holds for 24 to 48 hours, it might be a positive technical sign to buy. Again, take a long position. Also, pay attention to the RSI as it is becoming overbought at approximately 60. If the RSI hits 60 and continues, you may want to consider taking a small position and averaging up once the price starts to increase. Also, bear in mind the MACD does show it's losing momentum, which indicates the bears may still be in control. So we always just recommend that you only take a smaller position when possible. In this situation, again, if the resistance level of 0.16 is broken, it might be advantageous to consider maybe a half a position instead of a full position. Only put in half of what you have available instead of the full amount in case it does reverse on you. Always remember, taking a position after waiting for it to be tested twice is always the best approach. In other words, wait until the support level is tested, but do not take a position until after it's tested a second time. If it resists twice in a row within a 1 week period, or maybe you're just saving a 12 to 24 hour period, then you should consider taking a position, especially with it being moving as quick as it is right now. This scenario is only recommended when the support or resistance lines have been tested, though. Okay. Another thing to consider when swing trading is to understand the momentum, whether or not it's gained or lost. For example, in a long position, if you see the MACD is showing its loss of momentum and the RSI is also indicating it's overbought, then maybe consider selling half your total position. And when it becomes oversold and starts to gain momentum again, you can re-enter at a lower price, meanwhile taking profits. But we cannot stress this enough. Make sure you set a target, and if you do not hit your target, get out and take your profit. The key to being a profitable trader is to survive to trade another day. If you find benefit, though, from this video or this content, we really would love it if you were to like and subscribe. We want to wish you the absolute best on your trades, and of course, let us know your thoughts if there's anything else we can do to improve or cover moving forward. We are curious, what positions are you holding? Is there anything else that you want for us to go ahead and analyze? Comment below and let us know. Let's go ahead and continue to learn and grow together by building your wealth. Thanks for watching. We'll see you again soon.